My name is Michael Young, and I'm a lawyer who handles life insurance beneficiary disputes. A common question I get is, can someone buy life insurance on a stranger? And oftentimes it comes in a question that, well, somebody bought a life insurance policy out on me. And sometimes that person is somebody they don't know very well. Sometimes it's a family member. And there's been businesses that have bought life insurance on key employees or business partners. Well, the answer is that Texas law requires what's called an insurable interest. And typically that means, say, the breadwinner of the household, whether that's the husband or the wife, particularly with minor children, obviously the surviving spouse and those children have an insurable interest because they need to replace the income that they're losing because one of the parents passes away. Classic insurable interest. But sometimes a parent can have an insurable interest in a child because when a child is grown and earns income, they can help support the parent. And business partners will often have insurable interests in each other because the partnership will struggle if one of the partners dies. And sometimes lenders, like a bank, will require a closely held company to purchase what's called key man life insurance company for its principals and its officers because it may be more difficult for the bank to collect on its loan if one of those people should die. Those are all within the realm of insurable interest, and there's many other situations that can apply. But Texas law does not allow someone to just go purchase insurance on somebody that they may know, but they don't have any sort of economic relationship with or any sort of economic dependence. In other words, you can't go out and buy life insurance on 3 or 4 of your neighbors because you think they drink a lot or they have bad health and that they're gonna pass away in the next 5 years, and so you'd like to gamble. Maybe you'll spend $10,000 on premiums over the next several years, and possibly they'll pass away and you'll collect $500,000 for a term coverage. Texas law does not allow that. That's essentially gambling on the lives of people uh, purely for economic gain and not to replace any sort of income or not to reduce economic risk on you if that person should pass away. If you're facing a life insurance beneficiary dispute or if the life insurance company denies payment, feel free to give me a call or send me an email.